Hello and welcome to this Thursday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we're going to have Donny Gilbert giving us an update for the brokers. We also have John Kingston back with us with an oil update, but first we're going to go to Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Thursday carrier update presented by PowerFleet. I'm Strickland, and while the freight market is cautiously awaiting any fallout or impact from the coronavirus, we see that volumes are actually going up. They continue their rise, their seasonal rise. If you look at this chart behind me, but from last year, you've got outbound tender volume index going up, then the green line. This is 2019 right here, but you see it stalls out a little bit last year at this time after having a pretty demonstrative rise over the last little bit of February. Then it kind of evens out a little bit. Now, volumes did increase a little bit throughout the month. It did get up to as high as about a 104. But you see that we have already broken through that barrier. We're already at 104.82. We're about 3.5% higher than we were at this time last year. So this is a pretty good sign for carriers out there right now. That means that volumes are not at all impacted by the coronavirus. We're not seeing any, early warning signs. Again, it's still a little early in the process. We are seeing that Chinese New Year trough hit the ports, hit the rail volumes, etc. But it has not translated to truckload volumes just yet. So looking at capacity, has this increase in volumes hit capacity yet? Yes, it has. It's starting to show a little bit of an uptick in the outbound tender rejection index for the United States. Again, the orange line is from 2019. We were at about 7.37% this time last year. Again, falling out of that 2018 super hot market. Capacity was starting to become more and more prevalent. But this time, this year, we should see a little bit of a return to where we were before 2018 as the supply side starts to correct. We are seeing a pretty significant little uptick there. We were at about 5.3% this time last week, but now we're at 5.83%. Not enough to show a huge increase in spot market activity or anything like that. This is the early warning signs. This is the type of signal that you're looking for just to see if you are starting to see some sort of change in conditions, change in environment, something we haven't really seen that much of this year. A very flat market. Again, falling out of the holiday season, tender rejection rates typically plummet throughout January, then they fall again towards the end of the month, and then they flattened out in February. So this is a pretty standard pattern. So any uptick in tender rejection rate is a pretty interesting sign to watch. Now, looking at overall volumes in the United States in terms of van or reefer volumes, we are seeing both van and reefer volumes pick up throughout the early parts of March. So this week has actually been a pretty decent sign. Volumes for all modes are going up. If you look at the biggest markets in the country, Atlanta, Georgia, Ontario, California, Harrisburg, Pennsylvania, all showing increases in outbound volumes. So pretty significant increases at that. You've got a 5.56% weekly increase in outbound volumes from the Harrisburg market, the nation's third largest market. Dallas, Texas down here showing an actual 12% weekly increase in outbound volumes. So the nation's largest markets, including the ones that should be hit by the coronavirus, are actually really picking up pretty strongly here. So Los Angeles, Ontario, no signs of that yet. Now, Elizabeth, New Jersey is having a little bit of a decrease week over week. So we should keep an eye on the East Coast there. Looking at how this is translating overall to the market itself, the weighted rejection index map, some of you should be pretty familiar with this. Anything in blue is going to be your highest chances of seeing any increased spot market activity, increased rate pressure week over week in some of the largest markets in the country. And you can see clearly that a lot of that capacity tightness is driven by some of these largest markets in the United States. Harrisburg, Pennsylvania, we just talked about. Up here around Philadelphia, you could get caught in that corridor all, for a month if you are a carrier playing the spot market. But it does look like we do have increasing amounts of long haul tenders in this market. So there is going to be a little bit higher chance of finding a way out of the Northeast in the next week. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Good morning, everybody. My name is Donny Gilbert. I'm bringing you your brokerage update for Thursday here. Now, over the past few weeks, we've talked about going in and what maps should you be starting with to kind of figure out how to go about finding different markets in these times that have been slow through January and February. And here I brought up here behind me, I've brought up our outbound tender rejection rate for drive-ins, and it's a change over a 1 week period. So what happened 7 days ago versus now, we're comparing the rates to see which markets have increased and decreased. And these are good maps to use to figure out where you're going and what's changed over the past few days. But as you look at these, what I really want to actually talk about today is historical data. And that's going to be really important going through the year 2020 because last year in 2019, it was more difficult to use historical data because we were comparing to 2018. And 2018 was an epic year, so a lot of the trend lines were much, much higher. So when we looked at 2019 and compared to 2018, they were far different. So what I want to kind of go into today is as you find these markets and find the markets you're interested in on your map today, bring them up on charts, and when you bring them up, go to the kind of the top right and click display, drop down, change your seasonality to 1, and change your maps over to a seasonality display. Down in the bottom right, you'll see full year, click full year, and you'll bring up a chart like what we have right here behind me. And this is Cedar Rapids, Iowa. And here the blue line is what is going on in 2020, and the green line is what happened in 2019. 2020 compares a lot better to 2019 than 2019 actually compared to 2018. You'll see a lot of trends that are very close between 2020 so far and 2019. And what we want to look for is what is going to happen here in the next few weeks out. And here you see where in 2019, the Cedar Rapids market, in Cedar Rapids, Iowa, the market jumped up here around about the 6th, 7th of March on tender rejection rates, because that's what we're looking at right now. I like looking at tender rejection rates because that tells us what's going on with the spot market. Now, just because it jumped up in 2019 doesn't necessarily mean that every market's going to follow these trends, but it's good to know what is actually going on because they follow fairly closely. So it might be a few days later, it might be a few days earlier. So a good way to prepare yourself and figure out what's going on in these markets as well, click over and look at the seasonality as well for 1 year. My next market here is El Paso, Texas. There's a lot going on in El Paso. We're having a lot of imports starting to come in right now. So here at March 2nd, you see it drop down a little bit, and comparing to the red line here, which is March 2019, you see it drop down here a little bit, and then it takes off and spikes up to well over 20%. So this is something you might want to prepare yourself for. Keep an eye on the El Paso market because right now it's looking like rates could start to spike. And as a broker, I want to see this volatility. I want to be able to prepare and jump in and get ahead of this and optimize my rates in the El Paso market. So a great way to look at what's going on, look at your seasonality views, and you don't have to look at just tender rejection rates. Here in the Mobile, Alabama market, I've brought up actual volumes. And we see here, the blue line's where we are right now, the green line was 2019. And you see here over the next several weeks, we see volumes actually dropping down in the Mobile market. So what should you expect? Well, from the seasonality, expect for markets, for volumes in the Mobile market to actually start dropping now through the month of March and April. That's all I have for you today, guys. I appreciate you tuning in.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Hi, I'm John Kingston, and we're going to talk about oil. We'll give a quick little recap of prices. So you can see they're down and they've moved up over the past couple of days, but today the price is just going to be observing what's going on at the OPEC meeting in Vienna. I'm not going to try to throw too many numbers at you because it could be a little confusing, so let's make some of the simple ones. OPEC currently has a quota. It already has some cuts in place that it put into place at the end of 2018. The cuts are nowhere near enough. Demand projections for next year are collapsing. Right now the estimate is that demand will be down in 2020 from where it was in 2019. I think I mentioned that yesterday. I won't say it's unprecedented, but it's extremely rare. So OPEC knows that to avoid a price collapse, it needs to cut more. So overnight, an OPEC committee came up with a recommendation that OPEC should cut another 1 million barrels a day of oil production. Now, let's note here that they're already about 1/3 of the way there because they're underneath their earlier quota, but you're still talking about another cut of about 650,000 barrels a day. That's an enormous amount given how much they've cut already. There's a little provision though. They'll only do that if a group called OPEC Plus, which is a group of non-OPEC members that export oil and which are informally led by Russia, agrees to cut 500,000 barrels a day for a total cut of 1.5 million barrels a day. Now let's just say that the Russians, who've been involved in earlier agreements, aren't exactly the most reliable partners. They failed to really deliver on what they said they would do, and if they came out and said, well, yeah, there's going to be a 500,000 barrel a day cut and we'll be part of it, you know, I take that with a grain of salt. But there's no doubt about it that if OPEC came out of its meeting tomorrow and said that it agreed to a 1.5 million barrel a day cut, there's almost certainly going to be a spike in this price. It may not last. It will take time to see whether it actually will be implemented, but it's a significant number and you really need to keep your eye on it. So this is really the big news, I think, in the markets today and tomorrow. OPEC is meeting in Vienna. They've got this idea on the table. You know, let's see what they do with it. I want to mention something other that we talk, this is one of my favorite numbers that SONAR produces, fuels.usa. It's a number that shows the spread between the retail level of diesel price and the wholesale level of diesel price. You can see it got very, very high here, which, you know, from the perspective of a driver is maddening. It means that they're not getting the benefit of a drop in diesel prices. It plummeted, went right back up again, but it's starting to come down again. Right now, it's hard to really talk about what's going to happen with the price because everything is going on in Vienna is what really matters, and we're going to keep our eye on that. That's pretty much the oil report for today. Thank you. I'm John Kingston.
And that's going to do for this Thursday edition. Thank you so much for tuning in. The content does not stop here. We're always streaming around the clock, so check us out on all your favorite streaming platforms, including Apple TV. Also, if you're looking for a little bit more depth on the latest industry trends, check out our Passport program. You get access to all of our deep dives on the latest industry trends, and you get access to all of our world-class industry events, like our upcoming FreightWaves Live in Atlanta in May. Thank you so much for tuning in, and we'll see you on the next episode.